What's up everybody, welcome to Money Management channel. My name is Andrei and today I'm gonna be doing an update on NIO Stock.
I got the cash in the bag, stadium packed. Born a rock star in this life, gonna live it up.
And in today's video, first of all, I will show you where we are on the price chart and how we get there. Then I will continue with the fundamental news and I will show you what news was the catalyst for this quite substantial movement to the upside, during which this asset gained about 14% to its value. And at the end of this video, I will share my thoughts and my technical analysis. And I will show you what should we expect next. So let's start with the price chart. I made my previous video right here at this point when this asset broke this yellow line. And my main assumption was that somewhere below this yellow line, from the ranges from $7.3 all the way down to $7 mark, we could have a trend reversal. We had to see this bounce to the upside because we completed the latest movement to the downside from the beginning of October, and it has a completed structure of 5 waves. And we also hit, let me show you right here, we also hit pretty much the range of support that this asset established back in the end of May of this year at roughly $7 mark. And all these signs combined with some fundamental news that I will show you in just a couple of minutes, all these signs made this possible. We have this about 14% movement to the upside. So, and I have to say it was quite expectable. And let me show you the news that was the real catalyst of this asset during last week. So, right here you can see the article that was published on Yahoo Finance on November the 6th, and it's titled, "Stocks look for direction after rates-driven rally, markets robbed." And we know that last week was very positive because of the Federal Reserve announcement. Jerome Powell said that potentially the increase rate hikes are done for this year. And let me show you this. There is a bit more reason for investors to be more optimistic that the Fed is probably done with rate hikes. But one should not let one's guard down. Vasu Menon, Managing Director for Investment Strategy for OCBC Bank Singapore, said on Bloomberg Television, "If the economy proves to be more resilient, if inflation proves to be more stubborn, bond yields could go up once again." And yes, for now we have this relief on the markets, and let me show you some news directly related to NIO. I made my previous video at the very beginning of November, and when I made it, I didn't have this data yet. And here you can see that NIO delivers 16,074 vehicles in October, up 2.77% from September. On my previous video, I've told you that NIO should reach roughly 15.5 thousand vehicles for October, but they exceeded this number. And it is quite a good sign because, as you can see, they hold this line above 15,000 vehicles per month. And in general, they have all the chances to never go back below this range of 15,000 vehicles. And this leads to stronger fundamentals for this company. Let me show you another quite interesting news. On November the 4th, you can find this article on cnevpost.com. NIO exec reaffirms goal of entering US market by 2025. Let me quote you this. NIO plans to sell its first car in the United States by 2025 as a part of its goal to expand to 25 countries and regions, an executive said. "My goal and my commitment to this company is I want all of us to buy a NIO car from our personal paycheck one day," Nickel Asia said in a report earlier today, citing comments made by NIO's US CEO Janesh Iyer at a conference in New York. "I hope that one day will be sooner, which means we need help from everyone, government, policymakers, supply ecosystem, and infrastructure readiness," Iyer said. And they have a very huge plans in Europe. You know that they already opened plenty of showrooms, and they started their deliveries of their newest models based on NT 2.0 platform. And they also plan to start their deliveries in the United States of America, which is a huge step towards the very substantial improvement of their numbers. Let me show you another quite interesting news that is not so bullish for NIO's workers, but it is quite bullish for NIO as a company. NIO's job cut could save up to 2 billion RMB per year, says Deutsche Bank. Let me quote to this. NIO outlined an organizational optimization plan on November the 3rd that includes a reduction of about 10% of positions. To analysts, this is a step in the right direction. Based on average employee compensation in 2022, the job cut NIO announced on Friday are expected to save between $206 million and $250 billion per year going forward. Deutsche Bank analyst Edison Yu's team said in a research note sent to investors today. In our view, this is a much-needed right-sizing around costs given the current demand trend and capital markets backdrop, the team wrote. And I have to say that this is a very important step towards the improvement of their gross margin, because let me quote to this. With these price cuts coupled with deliveries averaging nearly 20,000 units per month in the third quarter, NIO's gross margin is on track to reach a double-digit level, 36Krs report said. After this business and organization streamlining, NIO is clearly on track to achieve further cost optimization, the report added. NIO's gross margin was 1% in the second quarter, down from 13% in the same period last year, and from 1.5% in the first quarter, according to its second quarter earnings report announced on August 29. And I have to say that we have several catalysts for this improvement. First of all, the increasing number of their deliveries in general, which leads to mass effect, so-called mass effect, when the more vehicles the company produces, the less cost of goods becomes for this company. Next one is the switching to NT 2.0 platform, and basically we know that they completed this switching this year in April and May of this year. And let me show you that they are planning to switch to next platform. For NIO's third generation core platform NT 3.0, the company's management has hinted that it may focus on fewer models to maximize efficiency, the team said, adding that they expect this to happen in 2025 or 2026. And in a matter of just, let's say, 2 years, they will implement the next platform that will be even more efficient. And this means it will also improves their fundamentals. On top of that, this cost reduction that I covered just a couple of minutes ago also should be a very good sign for the company in the long-term perspective. And guys, let me show you quite interesting chart. We are on fintel.io, and this is the list of institutional investors. You can see that the majority of them, and basically we can see it very, very clearly, that the majority of them are adding to their position, or some companies opened completely new positions on NIO, and this is quite bullish sign. But I want to pay attention on this chart. And as you can see, it is the number of shares that belongs to institutional investors. And we have 5 months in a row from the very beginning of summer, from June basically till October, till the end of October, that we don't have any decrease in the number of shares that belongs to institutional investors. This means we potentially, this might be a bottom, a local bottom for this ownership, and when this number is going to be higher, this means we might see much higher price for NIO stock in general. And let's continue with the technical analysis, but before we dive deep right here, please subscribe to my channel, hit notification bell and hit the like button. This helps me a lot. So guys, is it a time when you can add to your long position? I have to say that it is not the best point, despite quite substantial movement to the upside, and we are still in green on pre-market hours for today's Monday's session. I don't think that it is a sign of the recovery for NIO. We have to see more confirmation, and the confirmation should be the movement to the upside, then retracement, next movement that will break the previous swing high, and we shouldn't break these swing lows. This means we have to establish higher highs and higher lows on a smaller time frame, and when we break these several previous swing highs, it will be a sign that we might go even higher. And let me show you that if I zoom out and if I add let me show you the IDRV ETF. As you can see, let me clean the chart a little bit. NIO is mimicking this price chart, and IDRV is the index that tracks the performance of the electric vehicle manufacturers and autonomous driving vehicles in general. And as you can see, the general sentiment is quite bearish. This means we have to see more confirmation and we have to wait for the uptrend, and this will lead us to less risky long position. So I think that's all information that I want to provide you. If you like my video, please hit the like button and subscribe to my channel with notification bell. And see you guys and girls next time. Bye!
I got the cash in the bag, stadium packed. Born a rock star in this life, gonna live it up on the attack. Baby, I'm bad, I just wanna get caught up in this life. I'm crazy, I'm mad, doing no cap. Only God wants you.